All right, we're live. Okay. Thanks for joining us today. We already have some people here in the room, so I'm excited. We're going to talk about taxes and financial planning for United States expats who are living abroad. And so obviously my audience caters to a lot of people who move to Costa Rica, but Randall and Tom, which I'll introduce here, they do assist people who move to other countries as well. So maybe some of you watching aren't just thinking about Costa Rica as a destination, but you are from the United States and you're looking at moving abroad. So you are still going to have to do your taxes. And that's what we're going to learn a lot about today. Here from Randall Brody. So Randall is a U.S. tax expert, founder of Samaritan. So he's going to enlighten us on a lot of these topics. And then we have Tom. And Tom works with investment advising. So I'll let him tell you more about what he does as well. So I think I'll start with you guys introducing yourselves, and then we'll go through a little bit of the topics that we're going to cover today. So Randall, why don't you tell me a little bit about yourself, or just tell the audience about you and what you do? And
you bet. So I'm income tax expert Randall Brody, the founder of Samaritan and Peace of Mind Tax Help. I have over 30 years of experience with taxes for Americans. I've helped over 9,500 taxpayers solve their expat tax problems and collectively eliminate more than $800 million in tax debt. So whether you're facing audits, penalties, or overwhelming tax debt, or just need to have your U.S. tax returns prepared, I'm here to help you take the first step towards financial freedom, save the most money possible, and sleep better at night when you're living overseas in Costa Rica.
All right, perfect. And Tom, we'll give people a little background about what you specialize in.
Sure. So my firm, I'm Tom Zachystal. My firm is a registered investment advisor in the States. We're called International Asset Management. We're based in the San Francisco area. We have clients in about 35 countries. We deal with about 150 households. And what's unique about us is that almost all of our clients are Americans living abroad. I was an expat myself. I worked as an engineer for a company called Schlumberger in the oil services business for 10 years internationally. And then I started this business in 2002. And so we've been catering to expats for over 20 years now.
Excellent. Well, I'm really excited to have you guys here so you can share your expertise with us. And I did want to note for people, just keep in mind that the information that we're presenting is just for general education purposes. For yourself, you should always go to always seek your own professional advice. Well, I guess it could be through one of these sources here, but this webinar is just for you guys to get a general education on how things are going to be different when you move abroad. So I'm going to have Randall start off. It'd be nice if you could, tell us about the U.S. tax and reporting requirements for people from the United States, and how is that going to be different when they do move abroad?
Yeah, absolutely. I'd be happy to delve into that. The U.S. tax system is unique in that it taxes its citizens and resident aliens on their worldwide income, regardless of where they live or where the income is generated, whether it's in the U.S. or Costa Rica. So this means Americans living abroad are required to file U.S. tax returns annually, reporting their global income, including wages, interest, dividends, and rental income, among other types. So this requirement aligns with the U.S. principle of what they call citizenship-based taxation, in contrast to the residence-based taxation system that's used by most other countries. So let me highlight 6 key differences in tax and reporting requirements for Americans abroad compared to those that are living in the U.S. Number 1, there's the foreign earned income exclusion. So Americans living abroad may qualify to exclude a portion of their foreign employment and self-employment earnings from U.S. income taxes up to a certain limit. In tax year 2023, that's $120,000, but it's adjusted annually for inflation. And the exclusion is claimed on your tax return on Form 2555, and it requires a taxpayer to either pass one of 2 tests, either the physical presence test or the bona fide residence test. Number 2, there's the foreign tax credit. To mitigate the risk of double taxation, the U.S. allows taxpayers to claim a credit for foreign taxes paid on income that is also subject to U.S. taxation. And this credit is claimed on the Form 1116, and it could be particularly valuable for Americans living in countries with higher tax rates than the U.S. There's also what they call the foreign bank account reporting, also known as the FBAR, where Americans with foreign financial accounts exceeding a total of $10,000 in aggregate at any point during the calendar year must disclose these accounts to the Treasury Department using the FinCEN Form 114, also called the FBAR, which is filed separately from your tax return. This requirement is designed to combat tax evasion and ensure transparency in foreign asset holdings, as well as income reporting. Number 4, there's the Foreign Account Tax Compliance Act, or FATCA, which was enacted to enforce tax compliance involving foreign financial assets and accounts. FATCA requires Americans to report specified foreign financial assets on Form 8938 if those assets exceed certain thresholds. And this is in addition to the FBAR requirement and is also filed as part of the tax return. Number 5, state tax obligations. So some Americans may still have state tax filing obligations depending on the state they were last domiciled in before moving abroad. In certain states like California, New Mexico, Virginia, and South Carolina have more stringent rules about who is considered a resident for tax purposes. Lastly, Social Security and Medicare contributions. Americans working for U.S. employers abroad, including those that are self-employed, are required to continue making Social Security and Medicare contributions regardless where they live. So the intricacies of these requirements underscore the importance of proper planning and compliance. For example, the foreign earned income exclusion and foreign tax credit can significantly reduce or eliminate your U.S. tax liability, but they must be actively claimed and specific conditions must be met. Furthermore, the introduction of FATCA has increased the number and scope of financial institutions reporting to the IRS about accounts held by U.S. citizens, making compliance more critical than ever, as well as banking overseas more complex or challenging. So given these complexities, it's clear why understanding the U.S. tax obligations for Americans living abroad is crucial. It's not just about fulfilling your legal requirements, it's also about optimizing your tax situation.
Perfect. Yep, those are all really good points. Hopefully everyone learned a little bit something there. Also, just so to let you guys know, we will be going through questions at the end. So we're gonna, I have some questions for them so they can tell us some information that'll be important. But if you guys do want to clarify anything, we are going to go through questions at the end of this webinar. And also they have created a really cool, tool that I'm going to give you a link to that hopefully will also be, helpful to you guys on your journey as well. But we'll get to that towards the end. So I guess my next question is there anything that, someone from the United States who's moving abroad, moving to Costa Rica should be doing prior to their move? Is there something that they should be thinking of if they haven't already moved?
That's a great question. So being proactive is always great advice. So moving to Costa Rica, obviously a very exciting opportunity, but it requires thorough preparation, especially regarding tax and financial planning. The U.S. and Costa Rica have distinct tax systems, and understanding both is crucial for Americans planning to relocate. So I'll just share with you 5 different points of key steps and considerations before you move abroad. Number 1, understand your U.S. tax requirements. So as I mentioned just a few moments ago, Americans abroad must continue to file U.S. tax returns on their worldwide income. So understanding your tax situation and understanding that it's going to change and knowing about what those changes are, whether it's the foreign earned income exclusion or foreign tax credit, is very important so that you could mitigate your any potential double taxation. Number 2, learn about Costa Rican tax laws. Also, it's critical to familiarize yourself with these laws and how they might impact your tax situation. Number 3, seek professional tax advice. Ideally, consult with both the U.S. and a separate Costa Rican tax professional who's knowledgeable about taxes for expats. They can provide personalized advice, helping you understand your tax obligations for each country based on their expertise so that you can plan accordingly. This might include timing your move, structuring your income sources, or planning your investments in a tax-efficient manner. Number 4, banking and financial planning. Before moving, consider how you'll manage your finances across borders. This includes setting up banking arrangements in Costa Rica. Also address any U.S. banking and investment considerations, such as how your move might affect your access to these accounts and any reporting or taxation requirements that may remain applicable for the states in which those accounts are held. Lastly, consider state tax obligations and possible domicile changes to more favorable states prior to any move overseas, particularly if you're moving from a state such as California.
Do you have any favorable states that you would recommend, or am I allowed to ask that?
Of course, I am biased, so I'm based in Nevada. There is no state income tax, so that's a great state. Basically, any state that does not have state income tax is a pretty a safe bet to change your domicile to.
Okay, good to know. Well, thanks for that information. And Tom, so on the financial planning side, what is your, in perspective on what people should be doing prior to moving abroad, or even, prior to moving Costa Rica or anywhere that they might move out of the country?
Sure. So my firm provides investment management and financial planning services. So I'll talk a little bit about that aspect of it. The biggest thing we're seeing since the advent of FATCA, actually, a while back, is that people just have trouble dealing with U.S. brokerage firms if they're not living in the U.S. anymore. So one of the things, and this is usually a bigger problem, maybe not everybody is in Costa Rica is listening to this. This is usually a bigger problem in places like Europe or New Zealand or the Philippines. But one thing to look at before you move, preferably, is will your brokerage firm still deal with you? So call them up, tell them, hey, I'm planning to move to Costa Rica. What's that going to mean for me? Will the firm actually deal with you? And if it's a managed account, will the advisor deal with you? Because it's two separate issues sometimes. Sometimes the advisors are not allowed to talk to people outside the United States. And sometimes it's the brokerage firm that has a policy that they just won't hold accounts for people who are not U.S. residents. And then the third aspect of that is, well, will it mean anything if I can keep the account, deal with the advisor? Will it mean anything for the investments I have? For example, mutual funds, U.S. mutual funds might be problematic because mutual funds are considered investment companies under the law. And as the phrase goes, they have to be registered where offered. Well, if you're living in Costa Rica, they're being offered in Costa Rica, and U.S. mutual funds probably aren't registered there. So you may lose access to U.S. mutual funds, or perhaps they might be frozen in your account in the sense that you can sell them but not buy new ones or reinvest dividends. So some people get around this by using a U.S. address on their account, maintaining a U.S. address. In the States, maybe, a friend or relative, maybe you have a property there, maybe it's just a mailing address or something like that, mail forwarding. So then you need to think about whether you want to do that. These brokerage firms and banks, they have an obligation to know where you live, what you call know your client rules. And so they want to know if you're living abroad, where your actual residence is. They have an obligation under FATCA as well. They may have an obligation under FATCA to report on your accounts to the Costa Rican tax authority or wherever you're living. So they want to know where you're living. And if you're going to tell them you're still living in the States, well, then that might work for a while, but they're doing things like tracking IP addresses. And the other thing is, as Randall mentioned, if your address is going to be in a state that has a state income tax, well, they're going to be wondering why you're not paying taxes there because they're going to be getting 1099 forms and so on. So you need to think about that as well. The other thing, just moving on from that, other things to think about are, for example, if you have 401k plans that you might want to roll over, it might be easier to do that before you leave the States. In some cases, these plans insist on sending you a check. Normally, they'll send the check directly to the custodian, to Schwab or Fidelity or whatever you're using. But sometimes they insist on sending it to you personally. And if you're in Costa Rica and you don't have a place in the U.S. to send that, well, you might not want to deal with that. So 401k rollover is another thing. Two-factor authentication is another thing. Make sure that you'll maintain that, because you might need a U.S. phone number for that, or some cases even an address. Accessing socialsecurity.gov online used to be problematic for many years, and just recently they came up with this ID Me thing where people overseas can access it. So that's changed a little bit. Then other things to think about is, how are you going to transfer money back and forth? You'll want to have a local bank account, but your brokerage account, your other accounts, your bigger accounts might be in the States. So you can use a transfer service like Wise. They'll deal in Costa Rican colones as well. You can convert through them if you want, or you might be able to transfer. You probably can transfer US dollars to your bank in Costa Rica, and they'll convert it for you. So you just need to check the conversion rates, which one's better. What you probably don't want to do is, it might be difficult to do it through your own bank in the States, or through your brokerage firm. In some cases, they might not want to do international wires. That might be problematic. So that kind of a thing. And then, it might be worth doing a financial plan if you're so inclined. If you're retiring or something like that, your costs are going to be different in Costa Rica. Generally your costs are probably going to be lower than they are in many places of the States, but then you might have your travel costs might be back if you're flying back to visit family or something like that. And so doing a financial plan and having a look at how that plays out might be worthwhile. You might be able to retire earlier if you're thinking about this ahead of time, right? Because your costs might be lower. And then also longer term, what are you going to do longer term? If you're retiring, for example, you're going to get older at some point. You might need some help, health wise and so on. Are you planning to come back to the U.S.? Are you planning to get that in Costa Rica? What do you want to do longer term? Because you need to think about that, because that could change your costs and your medical care and so on. So those are just some aspects of things to think about before you move.
Perfect. So those are some really good, tips for before move. I mean, I'm on board with Wise. The addresses, a lot of things that you noted, really important. Having that factor authentication. We've had people running, you don't want to run into that issue where all of a sudden you move and you can't get into any of your bank accounts because you just ditched that old phone number and didn't think about it. So very important. You don't want to get locked out of your account, especially, before. So make sure to set those things up before you move. But what about after you move? So any things that you would say for someone if they're going to have investments, or where they should keep their savings, let's say after they've already moved?
Yeah, so generally for U.S. citizens, or let's say U.S. persons, so green card holders as well, we always recommend to keep your investments in the U.S. because, first of all, you're going to be subject to U.S. tax wherever you are, and so you're going to need forms like 1099 forms and so on. The other thing is that I know a lot of people, I hear that a lot of people move outside the U.S. for various reasons, but a lot of people say, I'm just not very worried about the political situation in the U.S. Oh, things are going downhill. I'm worried about the currency. I hear this all the time from expats. I want to put all my money into a farm in Uruguay or something like that because it's going to be safer. Well, you need to think about that because the U.S. is still a pretty safe place to keep your money. We have things like SIPC insurance on our accounts, FDIC insurance on bank accounts. It's a very competitive investment and financial marketplace, so the fees tend to be lower than outside the U.S. It's also a large investment marketplace, so you have access to markets around the world through your U.S. brokerage firm. So from the tax perspective, from the safety perspective, we recommend to keep your investments in the U.S. And of course, you'll want to have a local bank account and debit card and so on, and be able to move money back and forth. And there may be some local investments you can make too. You probably want to avoid things like mutual funds because those will cause PFIC problems for you when you're doing your tax reporting. But perhaps something like a term deposit if you're keeping a larger amount of money in there, or something like that. Some kind of cash products equivalent to CDs, say, those might be available. There might be a higher interest rate on those, probably not right now in Costa Rica, but generally speaking, it might be higher than it is in the States, and it might be local currency, so there's no currency risk. So good to think about those, but also think about sometimes the language the vernacular for investments is different. Like we had clients in Mexico who were told that they could get 10% interest from the Mexican investment that they were selling. 10% interest at a time when interest rates were practically nothing, even in Mexico. And so I looked into this, and it was actually an investment in the Mexican bolsa, the Mexican stock market. It just happened to be up 10% last year. So it wasn't interest. It was just that the stock market was up 10%. So know what you're getting yourself into in terms of local investments, and also what the fees are, and whether or not you're going to be locked into those investments. So there's some issues to keep in mind once you're there, and sort of getting settled in the longer term.
All right. Excellent. Well, those are really good tips as well, and good things to know. And I see we do have some questions coming in, which we'll get to. So I guess as you guys think of questions, feel free to drop them in the chat, because I'm going to come back through here and pull them up for you as well. And if anyone does need to hop off, let's say, I don't know, life happens, life gets in the way, you will get the replay. I'll upload this and make sure that you do get emailed the replay, if for any that, just couldn't get through everything, just so you have that peace of mind. So I know one of my favorite things when I do talk to people, people that are moving, when we work with them directly, the topic of taxes does come up. So I happily do get to explain to them a few positive things about taxes, about maybe particular tax breaks that they're going to get from moving abroad. So Randall, do you want to tell us a little bit about some of those tax breaks, or, kind of positive aspects of taxes that someone might experience when they move?
Indeed, there's some very good news for Americans considering moving to or currently living in Costa Rica, as there are several tax benefits and breaks that can significantly reduce your tax burden. So these benefits stem from U.S. tax provisions designed to prevent double taxation. And here's a short look at some of these advantages, some of which we mentioned previously: the foreign earned income exclusion, which is perhaps the most significant tax break for Americans abroad. The provision allows qualifying U.S. citizens and residents to exclude a substantial portion of their foreign earned income from U.S. taxable income. And as I mentioned before, for 2023, that's up to $120,000, and adjusts annually for inflation. To qualify, you either have to be physically present in a foreign country for at least 330 full days during any consecutive period of 12 months. That's known as the physical presence test, or be a bona fide resident of a foreign country for an uninterrupted period of an entire tax year, which is known as the bona fide residence test. You also have the foreign tax credit, another critical tool for avoiding double taxation, and it allows U.S. taxpayers to credit foreign taxes paid on income that's also subject to U.S. taxation, partially reducing your U.S. tax liability on a dollar-for-dollar basis. And this is particularly beneficial for Americans in Costa Rica, where local income taxes may apply to income earned within the country. Finally, there's also the foreign housing exclusion or deduction. And this is in addition to the foreign earned income exclusion. You can claim an exclusion or deduction for certain amounts paid for household expenses that occur as a consequence of living and working abroad, such as rent, utilities, real property, insurance, and so forth. And it's available for employed individuals, while the deduction is available for the self-employed. Also, they're both subject to certain limits and based on actual expenses. But taking advantage of these tax breaks and benefits also requires, as I mentioned before, careful planning and compliance with U.S. tax laws. And it highlights the importance of consulting with tax professionals who are well-versed in the intricacies of expat taxes and can guide you as a U.S. taxpayer through the process of leveraging these opportunities effectively.
Excellent. Yeah. So that's some good news. So hopefully you guys can be happy to hear that. I do want to ask, just to get an understanding of who's in our audience here, who's going to be retiring, or potentially, I guess, retiring before you move, or retiring maybe somewhat soon after your move. Maybe if you can just drop a me in the comments, that would be helpful, because the next topic, I did have some questions about this, so it'd be nice to know who in here is thinking about that. I mean, also, I guess if you're in your 30s or 40s, you might be retiring early, which has happened. We have worked with people who, because they moved, they were able to retire early, which is really cool. Or someone might end up moving at 25 years old and be living here the rest of their life. So you'll retire eventually. So okay, we got a lot of me's in here. So we have some perfect. So I think this topic's great. So I'm glad we're going to touch on this. So Tom, I was wondering about, how is retirement planning different for someone who's moving abroad versus someone who essentially is not moving? What are your opinions on that?
Well, I guess the first thing that's different is you're going to have different costs, right? So, for example, healthcare is an issue. I don't know if there's a national healthcare system in Costa Rica, but that's quite common in many places. Even if there isn't, you generally have lower healthcare costs, right? But then again, you might have higher travel costs if you're flying back and forth to visit family or something like that. You also need to think about longer term. Some people might want to, eventually it might be in something like a nursing home or assisted living or something like that. Well, do you want to be in that facility in Costa Rica or abroad, or do you want to be in the States? In the States, it can be, I'm in the San Francisco Bay Area. It's crazy expensive here, that kind of a thing. So the costs are generally going to be different, and they're generally going to be lower. I mean, a lot of people move overseas to places like Costa Rica, and they say they can live off their U.S. Social Security, which is pretty hard to do in the States these days. So the costs may be lower, and just keeping an eye on the different costs. But one thing that might be higher is inflation. So right now, inflation is low in Costa Rica. I think it's negative. I looked it up. Apparently, it's negative right now. But it tends to be higher in countries like Costa Rica or Mexico or a lot of the emerging market countries. It tends to be, on average, higher than it is in the States. So it's also important to think about how inflation is going to affect your retirement and your financial plan. The other thing is the currency tends to be more volatile. And in fact, the colon was weakening versus the dollar for many years, and then they floated the currency in 2015, and it's been more or less stable up and down. But it does tend to be more volatile than it is for major currencies like the dollar or the euro or something like that. The other thing to think about is when you're buying property. Well, if you're going to buy a property in Costa Rica, it's going to be maybe a different process. It might not be so easy to get a mortgage. And the other thing is, what about if you're going to inherit property once you've moved to Costa Rica? Is there going to be some kind of issues around that inheritance? Is there an inheritance tax maybe, or something like that? And then finally, later in life, what about estate planning? You buy a place in Costa Rica. Eventually, you might want to pass that place on to someone. How's that going to work? And also things like if you have trusts or something like that, are they recognized there? What if your spouse or maybe yourself is a non-U.S. person? So that makes a difference if you're neither a citizen nor a resident in the U.S. and now you're inheriting money from. That's also going to be different, or inheriting U.S. property. So those are the kinds of issues that make retirement planning different for Americans living abroad.
Perfect. Those are super great points. And for someone retiring, what would be the best way for them to be receiving, their income or their investments or savings or pensions? What do you recommend in that sense for when someone's already here and they've retired, for receiving those?
Yeah, so first of all, a lot of people think of income in terms of dividends and interest, or maybe income from annuities or Social Security. But income could come in other forms like capital gains, for example. So in terms of your investments, you could just sell investments and generate income that way. So there's different types of income. Income doesn't, from an investment perspective, income doesn't just need to be bonds. You can have other income producing investments. I mean, for a few years now, when interest rates were really low, bonds weren't such a good deal, right? Because the other thing is that when interest rates go up, bond prices go down. So other investments like preferred shares or dividend producing stocks or real estate investment trusts, maybe not a great investment now, but there are other investments that generate dividend and other forms of income. We have some money in these things called business development corps, which is like publicly traded private equity. You get a 10% dividend on those. So there are lots of ways to generate income. And then getting it over there, well, we talked about whys and how you get it over there, and in terms of the exchange rate and so on. So we already discussed that. I mean, the other thing to think about from a financial planning perspective is how much guaranteed income are you going to have, and then how much is subject to fluctuation. So guaranteed income is things like Social Security, or if you have a defined benefit pension, or if you have annuities or something like that, that can be considered guaranteed income, and some of it is even inflation index, right? Like Social Security, for example. And then you have the variable income that might come from your investments. So if your guaranteed income will cover all your expenses and everything, your living expenses, then you might have a lot of flexibility on the investment side. You might choose to have a very conservative portfolio, or you might choose to roll the dice because your income's already, or your expenses are already being covered from somewhere else. So that's also an important thing to look at. It's important to look at it not just from a risk tolerance perspective. As financial advisors, we always do this questionnaire for people. How much risk can you stand in your portfolio? How much volatility? But when you're doing it from a financial planning perspective, you look at it from the other direction. How much income might you need from your investments to maintain your lifestyle? So it's good to look at it in both respects, I think.
Perfect. And thanks for your input on that. That sounds, it's all really good advice. And I hope you guys are learning things. If this has been helpful, can y'all put something in the comments? We're definitely going to go through some questions here in just a second, but hopefully this information is helpful. And then, maybe things are not covered. That's when we're going to hear your questions. So definitely, if you have any questions, go ahead and put them, in the comments. A little bit of background. I actually used to work for an expat tax company. And so I can say it's pretty complicated. It's not something, when I've worked in the past with other CPAs, maybe your average CPA isn't going to understand all of the different intricacies that go into expat taxes. Again, for a lot of the things that Randall was talking about, the foreign earned income exclusion, the report of foreign bank accounts, there's these different, tax breaks that you can even get. Then maybe even if they're done incorrectly, then you don't get those tax breaks. So Randall, what would you say is really the importance, or the things that someone should be looking for when they're looking to hire someone who's actually specialized in expat taxes?
Those are excellent points. So there are several key factors that expats should consider to ensure they receive competent and effective guidance, while at the same time minimizing their tax liability to the greatest extent. So you mentioned one of them already. Look for a professional that specializes in U.S. expat taxation. So this specialization indicates a deep understanding of the unique tax issues facing Americans living abroad, including all the different tax benefits that I mentioned, such as the foreign income exclusion for tax credit and more, and the reporting requirements for foreign assets and bank accounts. So as Sarah mentioned, your local tax professional may have once or twice prepared a return for an expat, if that, or your local H&R Block office will rarely have specialized expertise needed, and mistakes are frequently made, causing taxpayers to have a higher tax liability and oftentimes unneeded tax penalties. Number two, look at credentials and qualification. Verify the tax professional's credentials. Ideally, they should be an enrolled agent or a CPA. And these are indicators of their expertise and commitment to staying updated on tax laws and regulations. Number three, look at communication and accessibility. Given the distance and potential time zone differences, it's important to have a tax professional who communicates clearly, promptly, and in a manner that you find accessible and understandable. They should be able to explain complex tax concepts in simple terms and be responsive to your inquiries and concerns. Number four, look at reputation and reviews. Research the professional's reputation and look for reviews and testimonials from other expats on sites such as the Better Business Bureau, Google, and LinkedIn. Feedback from other clients, particularly those in similar situations to yours, can provide valuable insights into the quality of service and expertise you can expect. Lastly, privacy and security. Ensure that the tax professional or firm has strong privacy and security measures in place to protect your sensitive financial information, especially when dealing with international transmission of documents and data. So if you decide to work with a tax professional, selecting the right U.S. expat tax professional is a critical decision that can significantly impact your financial health and peace of mind.
Absolutely. And Tom, I'm going to throw the same question at you. What are some things that, people should be considering when they're looking at a financial advisor or an investment brokerage and they're, living abroad?
Well, I think the first thing is, will these people continue to deal with you once you move abroad? That's probably the most interesting question, because firms are pretty variable on this. I saw in the comments, some people are asking about Fidelity and Charles Schwab and so on. So we use as custodians for our client accounts. We use Charles Schwab and we use Interactive Brokers. They'll both deal with people in Costa Rica. Interactive Brokers will deal with Americans living practically anywhere. With Schwab, it's on a country-by-country basis, but they're also pretty good. The others I don't really know about. Costa Rica, as I said, isn't as big a problem as Europe or other places. But then also, will your advisor be able to deal with you, and how are they going to deal with you? Are they going to do Zoom calls? Is it going to be a phone call? Are you going to be able to reach them when you want to reach them? That kind of a thing. How's it going to look? Because some firms are just not set up for dealing with people at a distance, and because they're used to people walking into their offices, sitting down every quarter, and having a face-to-face meeting, right? So how are they going to deal with you as well? Then I would say financial planning before and after. We touched on some of those points, especially beforehand. And if you're thinking about it, like a few years down the road, hey, you might be able to retire early if it's cheaper to live in Costa Rica. So think about that. That sounds pretty good, right? Moving money around, another consideration. Is your advisor going to help you with stuff? Do they have the knowledge necessary? What if you need a banking relationship and you need to set up a banking relationship from abroad? So, for example, there's a credit union called the State Department Federal Credit Union, which is pretty good at that. So, just having this kind of knowledge is pretty good. Sometimes it's nice to deal with somebody who speaks expats, somebody who's been an expat themselves and they've lived a life. And I remember when I used to come back from exotic places like the Middle East when I was in the oil business, and I could never really talk to my friends about that because it'd be like I was showing off or something like that. So it's kind of nice to deal with somebody who's been there and who understands the expat experience, I think, and especially if you're going to be trusting them with your life savings or something like that, it's nice to be able to have a conversation who's lived your life, and you can have more than just a sort of a superficial type of conversation with, I would say. So all those points I think are interesting points to consider.
Yes, absolutely, they are. Excellent. So I'm gonna put up this this helpful link that I know you guys wanted to share with everybody, and we're going to go over questions. So this infographic, it has the 10 costly misconceptions about expat tax preparation. So if you guys want to talk quickly about it, or people can write it down, you can put it in your browser. Randall, do you want to tell us a little bit about, this link real quick? And I'm going to start pulling up some questions because I know you guys kind of created this as a tool that could be helpful for others.
Yeah, sure. So navigating the maze of U.S. tax laws for expats can be daunting. It's fraught with potential missteps and misconceptions that can lead to costly errors. So that's why I've distilled that into essential insights into that infographic that's free. It's just our way of contributing to your financial well-being and compliance as a U.S. taxpayer abroad.
Excellent. Well, thanks for doing that. I appreciate it. I'm going to pull up. So some of these questions I've been seeing come in. I think some of them might be for you guys. Some of them might be for me. I might know more of the Costa Rica side of things.
No worries.
This particular question, this person's asking about yearly, what yearly Costa Rica taxes should they expect to pay on an active corporation? But maybe what you guys can do is, we'll shed some light as to, have, separate webinar. We can bring in a Costa Rican, to talk about the Costa Rica tax side of things. But could you guys speak on how is that handled with the tax? Sorry, I got a lot of dog stuff going on over here. I don't know if you can hear all the barking. How do you guys handle the United States side of someone having an inactive corporation?
Well, if it hasn't been formally dissolved, the U.S., at least from a tax perspective, they treat that as a foreign corporation. And there's generally an additional annual disclosure separate, actually it's part of your individual tax return. It's called the Form 5471, and it's a foreign corporation return that would be required whether you're running a business or just holding property in this corporation, whether it's active or inactive. As long as it's held in a corporation that hasn't been dissolved or moved out, it's going to trigger the filing of this tax return, which unfortunately is, a very complex and potentially very punitive filing if it's not disclosed.
Perfect. Oh, we got all the dogs going right now, don't we?
No worries. I have dogs too, so you might hear them bark occasionally too.
Gosh, my house is getting a little loud there for a second. I think it's quieted down for a minute. Okay, excellent. Next question. Tom might have touched on it, but I drifted for a moment. I have a question about IRA withdrawal withholding. This is from Sean.
Right. What's the question? Well, I think the question is probably what's the withholding rate going to be? And probably he's asking that, Sean or she, is because there's a mandatory 10% withholding if you're a U.S. citizen for many brokerage firms these days. So you might see that on your IRA distributions or so on, like a mandatory 10% withholding for non-residents, basically. That's if you're a U.S. citizen. Now, if you're a non-resident alien, then there could be a 30% withholding assessed on your distribution. So that's another thing. And then you need to think about the tax treaty, which there isn't one in this case. So probably in Costa Rica, if you're a non-resident alien in the U.S., non-U.S. person, then there could be a 30% tax withholding on things like IRA distributions.
Perfect. Okay, I know we touched on Charles Schwab. Charles Schwab keeps popping up on my radar for 401k and international banking. Yes, I guess, and she's saying kind of thumbs up or thumbs down on this bank. I say thumbs up, but you do need to maintain a United States address. I can tell you that. I'm not sure on the 401k side. You guys have any thoughts about this particular bank?
You don't need to maintain a U.S. address for Schwab. You could use an address in Costa Rica if you wanted to. I don't know off the top of my head whether they would have the same banking facilities in the sense of checks and the debit card. That's kind of country specific. But yeah, and then the 401k, well, I mean, probably we're talking about rolling it over to an IRA. So then you need to think about, how's that rollover going to happen? Is it going to be a check to you personally? Is it going to be a check made out to the custodian? Is it going to be a wire? That kind of a thing might come up.
Excellent.
And sorry, I should mention one more thing. There is a difference sometimes whether you're dealing with the retail side of a brokerage firm or the institutional side. So the retail side is business to consumer. That's where you go to set up your own account. And so if you go directly to Schwab, you're managing your own investments. The situation could be different there than if you're going through an advisor. So firms like ours, we're on the institutional side. We have an institutional relationship with Schwab. And so, for example, in Europe, I know that's the difference between being able to buy US ETFs or not. If you go to the retail side and you live in the EU, you can't buy US ETFs, but we can buy them for our clients. On the institutional side. And so there might be a difference also with the address thing. I'm not sure about that. So sometimes there is a difference between dealing with the retail or the institutional side through an independent advisory firm.
Yeah. Yeah, at least just in my experience, if I don't have the U.S. address, I don't get the perks of getting my ATM fees refunded and some of the other benefits of just their checking accounts. Just checking account, nothing crazy. Okay, we got a lot of comments here. Okay, this person, my understanding was that there's no tax treaty with Costa Rica and those tax relief measures did not apply. Is that correct? From Terry.
So that is correct. There is no tax treaty with Costa Rica. However, all those tax benefits that I mentioned, the foreign earned income exclusion, the foreign tax credit, and so forth, those are all part of the U.S. tax code, and those are available to all U.S. citizens and residents.
Okay.
It's not a tax treaty benefit.
Okay. So Marlo has a question here. She's asking if CAHA is tax deductible. So the CAHA here in Costa Rica is the medical, like universal healthcare system that someone has to pay into when they get their residency. They have to pay into it whether they want to or not. Do you guys know if that would be tax deductible? I don't think that was a deduction on my own taxes, but fair enough question.
This is a great question. So yes, medical premiums, whether they're U.S. premiums or foreign premiums, can be deductible if you itemize deductions. Unfortunately, there's a very high threshold before you can deduct medical expenses such as premiums. It's 7.5%. Any expenses that exceed 7.5% of your AGI. So unless you have a very low income or very high medical expenses, oftentimes it's not a deduction that's available to most taxpayers. It's there, but it's pretty rare.
Okay, thanks for answering that. Next one, we have a question from Alex. This is for Tom. Typically, when people are discussing moving abroad, it's discussed in a framework of being all in one country or another. What are your thoughts on planning change given the high rate of people who try the expat life and return, and people who leave the U.S. but are not committed to a single country? I guess, what do you recommend for people who maybe are just trying something out, might go home, or they're going to try out multiple places and bounce around a bit?
Yeah, and this is also a question for people who are maybe working and they have a contract for a year or two overseas or something like that, and they're really keeping their life in the U.S. If that's the case, then quite often, and especially if you're keeping a place in the U.S., then quite often it isn't worthwhile to make this change and to like using a foreign address on your bank and brokerage firm. And in that case, if you're just going over there for a short period of time, or if you can make the case that really you're planning to return and it's temporary, I would keep it as simple as possible. I would probably try to keep that U.S. address on your accounts, not make a big deal out of it. And that would be the one thing that I would say, don't complicate your life by starting to ask your brokerage people all these questions, and then maybe they're going to start asking questions of you. So just keep it simple, yeah. And if you're moving from country to country, well, that gets a bit complicated. You have to be a tax resident somewhere. So the question is, where are you going to be a tax resident? And then it could be a question of domicile, if you like. Where your closer ties, and quite often that might be in the U.S. and it might be in a place like California. So then you have to worry about the state taxation too. So that might be another issue. You're probably going to be a tax resident somewhere. So where is that going to be?
Perfect. Thank you for that. So we have some other questions that are a little bit similar-ish. Here, Barbara's asking about being a digital nomad, working with as a consultant with clients only in the United States, asking if she'll have to pay Costa Rica taxes. I can answer this part and say that the only time you're going to be taxed in Costa Rica is if you own a business here or if you're legally employed here in Costa Rica. So you're not taxed in Costa Rica from what you're making online through the U.S., I'd say, as a consultant in this situation. But I'll let you, Randall, maybe you can.
Yep.
Yeah, I guess.
So federal taxes, yes, that will always apply, irrespective of your type of income and where you're working and who you're working for. As far as state taxes, that will depend on where you're currently domiciled or where you were domiciled prior to your move overseas.
Perfect. And this one was a little bit not too similar, but another one for you, Randall. You know, if they're only be there for 6 to 8 months a year, do you see that it's really going to have much of an impact on their taxes at this point?
It can. Again, it depends on your type and nature of your income. Is some of your income going to be earned outside of the country? What type of investments? While you may not qualify for some tax benefits like the foreign earned income exclusion, if you're paying income taxes to Costa Rica, then it's possible that the foreign tax credit can have a positive impact on your U.S. return.
All right, perfect. And then Glenn's asking if there's any tax breaks for the actual move to Costa Rica.
Unfortunately, the moving deduction was removed from the U.S. tax code several years ago, unless it's a combat zone related move, which I don't think there are any combat zones in Costa Rica, thankfully.
And then we have Scott. I thought this was a pretty good question too, because some people here, some people come and just do their visa, their border runs. Maybe they don't qualify for residency yet. Maybe they're not ready, or they're just not ready to file. So, what would be some of the differences if they're Costa Rican resident versus just kind of here on a tourist visa?
Bottom line, you still will have a U.S. tax filing requirement. As far as the complexity on your return, it just depends on any impacts. Are you paying any taxes to Costa Rica, even though you're only making visa runs?
Okay.
Do you have any foreign accounts in Costa Rica, any foreign investments and the like? Yeah.
Mm-hmm. Okay. We're coming down to the other little batch of questions here. I appreciate you guys submitting your questions. This is great. I mean, all these are really excellent questions, and it's probably I love when people bring up questions, because sometimes they'll bring up something that maybe someone just hadn't thought of, but they also have a question on, or it just kind of uncovers extra information. Okay. I plan to move to Costa Rica as a digital nomad several years before I retire. How would earning money via U.S. companies, digital nomad, be taxed? So I actually already answered this. You're not going to be taxed in Costa Rica. So your taxes you're still going to file, in the United States. But then Randall can tell you, I guess depending on the duration of you in Costa Rica, how many days, could depend on any benefits that you could get from it. But Randall, correct me if I'm wrong on that.
And how that income is paid out? Are you taking strictly dividends, or are you issuing a paycheck, paying wages?
Yeah.
So that's a critical planning question.
Mm-hmm.
To be proactive about what's going to be most beneficial for you. So, for example, if you'll qualify for the foreign earned income exclusion, you'll definitely want to pay out some wages so you can exclude that from taxation.
Yes. Okay, another phase is whenever people on Facebook, it doesn't always show us the name. So this person asked, I have a set, I'm guessing they're saying I have a set income. I've got a few commercial properties paid off. Rent rolls in every first, 15-year leases, exceeded income requirements for residency in Costa Rica. Maybe this was just a comment. I don't know if this was a question. Sorry. Okay. Aaron asks, are there limits on deposit in Costa Rica banking system if you are retired when you move there? So I guess he's wondering if there's a limit on how much you can deposit. I mean, I do personally explain to people with the banks here, you can't just come open up an account and dump $100,000 into it. The bank is going to immediately block your transaction, have a lot of questions. If you're not even a resident, you're not going to be able to do that. If you do get your residency, they're going to want to see a lot extra. Why are you moving the money down? Where did it come from? So if you want to move a certain amount of money into Costa Rica, you're going to have to talk, to the bank about that. And probably also they're going to ask you to provide a lot of different documentation. So I can at least answer that part. But Costa Rica's banking system is not super simple, not super easy, but there are ways to kind of hack it and make it a little bit easier, which we can talk about in a different webinar or a different session or YouTube video, but it's not really a country that you can just kind of come and dump money into because they're going to have a lot of questions. Okay, maybe I think this is a question too. Could easiest provide proof to Costa Rica of years of rent every person? Okay. Oh, maybe that was part of the question that the other person said. Sounds like maybe this question was more for a Costa Rican lawyer. I'm not sure. Okay, we're just going to move on. Anne asks, how do you even find an expat expert CPA? Well, you have one right here. You got some expert advisors right here. Their information, is in the emails that I was sending and how you were able to attend the webinar. If you missed those, you can shoot me an email and I can get to them. But yeah, they definitely specialize in this, and you guys know how to work with people remotely, which is great too. So you guys are very used to working with people that are abroad. Okay, let me just make sure I'm getting down to actual questions. Oh, do expats have to purchase property as a corporation? I can't answer that. You don't have to. There's some pros and cons to doing it. If you want to take advantage of, the new investors bill that came out that does allow you to import items tax-free, you'll probably want to purchase it under your name. But this is going to be best to discuss with a lawyer in Costa Rica, this question. Someone said no, followed by a live Q&A question. Yes, we're here. Okay. Okay, yeah. I had this question a lot via email. So for the Canadians, every time I sent out an update about this particular seminar, I had like at least 10 emails saying, what about Canadians? So I will look for someone to also come on and speak a bit about Canada. From what I understand from Tom and Randall, Canada isn't as complicated as the United States. So that's good news. But I will definitely look into, creating something like that as well. Okay, it looks like Sean says, thanks for touching this IRA withdrawal holding question, but he has specific questions. So maybe if Sean has more specific questions, he says he still needs clarification on his IRA withdrawal holding. Would this be better for Sean perhaps to email you guys this question?
Yeah, probably. Yeah.
Okay, let's do that, because maybe if I missed something in here, but Sean, I think I've been going through everything one by one. Terry asked about if one is self-employed, would CAHA be deductible that way? I mean, do you guys know of universal healthcare payments in foreign countries being something deducted ever as an expense?
No, I have not. No.
Okay. Okay, well, okay, is it possible to get a bank account in Costa Rica on a tourist visa? This is kind of a complicated question because let's say one bank, the same type of branch in one bank in one town will let you, but the same type of bank branch of another town won't. So yes and no, it depends. You got to go around to each bank in whatever town you're going to be in and see if one will let you have an account, or you might have to go to another bank for if you want to get one on a tourist visa. Some will not let you have an account at all. Some will, but with limitations. Usually a lot of the limitations would be you can only deposit about $1,000 a month into the account. So it's just used to maybe put some money in to pay your bills online. Okay, my mom said if you collect Social Security, you have to use the Banco de Costa Rica and they deduct $50 a month. Well, maybe in this case, what has happened is, the bank is going to have their own commissions. When a foreign wire transfer comes in, the bank also takes their cut of that wire. Perhaps that's what's happening. Okay, I'm going to see if we can. I'll look through these other questions, but I think we're about at the end here, and I want to be respectful of everyone's time. Here we go. Would you consider doing a seminar on healthcare for retirees? Yep, we could do that. Oh, here we go. Okay, here's one for Tom, and I'm just going to browse through to make sure that there's nothing else in here that's pertinent to get to. But if you guys do have additional questions after this, you can get in touch with Tom and Randall. And I have included their contact information in the descriptions below. So Tom, this is for you. Do you believe that
Sorry. Okay. Yeah. The FDIC question. I don't know what the guarantee is for Banco Nacional. It's probably not $250,000. But I would say this. So you just have to look at the financial crisis in 2008 and what happened there. There were banks that went under, and the guarantee at the time I think was 100,000, and then as a result it went up to 250. But nobody lost their $100,000, the part that was guaranteed. If they lost money, it was because they had more than 100,000 in it in an account. There was like Indy Mac, I think, that failed, and that was an example of people who had like more than the FDIC limit, and I think it took a long time to get that money back, and maybe some people lost some money even on that. But as far as the guaranteed amount goes, I think it's pretty solid. Yeah.
Okay. And actually, I did see a few others in here. Okay. So Joaquin says, what about using a major credit card in lieu of banking? I mean, that probably wouldn't work long term. I mean, you'd have to pay your credit card with a bank, I assume, right?
Yeah, somehow you have to pay the credit card. So you're going to need banking. So I don't know. It might be a question of credit card versus debit card or something like that. But I would say it just depends on how they're accepted and what it is and so on.
Yeah. In some cases, there are some credit cards, for travel that will have the 0% foreign transaction fee. So that could be good for, going through your daily expenses without having the foreign transaction fees. But when it comes to taking out money, then of course you're going to have fees. I thought this was a good question here. So I'm American and my wife is Canadian. Is it more advantageous to report separately, one U.S. tax filing and one Canadian, or together if we're living in Costa Rica?
That's a great question. And it's a hidden pitfall also. General rule of thumb, filing jointly versus separately, it's more advantageous to file jointly unless your wife or spouse is not a U.S. citizen or resident or green card holder. Because once you file a joint return, you're making a default election to treat them as a U.S. taxpayer. And that's not a temporary election, that's a permanent election. So all future years until you revoke that election, they're subject to U.S. taxation, just like you as a U.S. citizen. So it's a major pitfall.
That's a bad gift to give your spouse. Like, don't give the gift of tax.
Yes, you might save money on your tax return, but you're also going to subject them to taxation on their worldwide income as well.
Yeah. Here, sweetie. Look what I did for us. Oh, that would not be fun. Okay, Anne, I do want to clear this up. Anne said, how can you be a rentista if you can't deposit money into a Costa Rica bank account? So whenever, let's say you're filing rentista, this is a residency category here in Costa Rica, or the pension, a lot of times, the lawyer that we work with will work in that residency process to set up the bank account. So it's kind of set up with the residency process. So it's not just you going by yourself. So that is how that is done. It's actually a special account that's set up. Glenn asked, can you get U.S. tax help from the U.S. Embassy? My first judgment says no, but I don't think the Embassy of Costa, I can barely, getting a passport appointment is a bit of a pain with them nowadays. So I don't think they're really going to be very helpful with taxes. I think for that, it would be best to go with, a firm that does specialize in expat taxes. And I think that's about it. I think those are the major questions that we had. And so I'm going to take this. So this was, remember the link here, the taxsamaritan.com/misconceptions. This was their, little PDF that they put together for you guys to take a look at. That'll hopefully give you some other good tips. I thought this was a great webinar. I learned a lot. So I hope you all learned a lot and that you all found it was really helpful. And if you guys do need to get in contact with Randall and Tom, or maybe Randall and Tom, I'll let you guys tell me, or Randall, what is your best way that you prefer for someone to get in contact with you?
The best way to get in touch with us is just email us at help@taxsamaritan.com. just like you see on the screen, help@taxsamaritan.com.
All right.
Yeah,
Well,
and the just to be clear, so taxsamaritan.com is Randall's website. Ours is iamadvisors.com, and we have a contact form on there. Here, I can put it in the chat, I guess. We have a contact form on there, and that's usually the best way to get a hold of us and schedule a call if you like, that kind of a thing.
excellent. Yep, it's there. Well, this is great. I really appreciate you guys coming on and enlightening us on these different topics. I hope you all found that this was helpful, and we'll be on the lookout for other webinars. I thought this is a really great one, and it was great getting to chat with you guys.
Thank you for having
Yeah,
us.
thanks for putting it on, Sarah. Yeah.
Oh, you're very welcome. I like to make sure people who are moving get all the full, complete information, and a lot of things that do fall in through the tax for the cracks is taxes. It's sometimes I've seen it become a very afterthought of like, oh yeah, wait, what am I supposed to do about that? So I'm glad that we're covering it. People can plan a little bit more ahead, and they can actually take some action steps before they move to be, fully prepared in this wise for taxes and financial advising. All right.
Well, we hope to see you in Costa Rica one of these days, maybe.
Yes, that's what I was going to say. I remember you guys talked about wanting to come visit and wanting an excuse to come visit. So if anyone would like Tom and Randall to come on a business trip to Costa Rica to speak in person, don't be shy about letting them know, because I know that they are looking for an excuse to come down here.
Always.
Yeah.
The sunny Costa Rica.
We buy drinks.
Oh, I got them on here. Good. Okay. Well, we'll see you guys. We'll see you guys in the next one.
All right. Thank you.
All righty. Bye-bye.